Hello guys. Nowadays investments are not restricted to boundaries of a country. An informed investor wants to build a global portfolio. Investing globally provides investor with broader investment universe for selecting portfolio investments. It can broaden investor diversification, potentially adding new source of return. In some cases, it can also help to mitigate some risk associated with countries and economies. So, why invest globally? First of all, diversification. If the stock market in one part of the world does badly, then having some money in another part would offer protection. The basic idea is that different kind of investment, different by type of industry, company size and geography, is best investment strategy. Next, dollar effect. Dollar is world's reserve currency and it is expected to appreciate vis-a-vis emerging market currency in India like Indian rupee in a long run. US equity investment have outperformed Indian equities in many years mainly because of exchange rate effect. Next, innovative businesses. Attractive investment opportunity in new gen firms from sectors such as e-commerce, consumer technology, which are not represented in Indian listed space. Wider choice from across the world, and there is a ability to adjust to economic and business cycles. Finally, better valuation. US Dow Jones Industrial Average trades cheaper than Sensex on a trailing price to earning basis. Many world-class US businesses are available at surprisingly reasonable valuation compared to their Indian counterparts. Foreign equity investment. Under liberalized remittance scheme, domestic investors are allowed to remit a certain amount of money during a financial year to another country. Currently the limit is 2.5 lakh dollars. This money can be used to buy foreign stocks and debt instrument in overseas market. Apart from this, the remitted amount can also be used to pay expenses related to traveling, medical treatment or studying. So what is the process involved for international equity investment? First of all, open a trading account with a brokerage house that offer overseas trading facility or international broker which allows Indians to trade. Submit duly filed separate account opening form along with KYC documents. For investing trading in foreign stock market, you are required to transfer money to international partner of domestic equity broker or international broker. Funds are transferred to the international partner as below. Submit application cum declaration form under LRS, Form A2. Sign a form for FEMA declaration, form authorizing designated bank branch as authorized dealer. Alternative to investing in foreign equity is global mutual funds or ETFs. These funds are denominated in local currency and there is no limit to investing in these funds unlike direct investment which are capped at US 2.5 lakh dollar. International mutual funds are schemes which invest a major portion of their assets in overseas market including stocks, commodities, etc. Global ETFs are investment products which allow domestic investors to take exposure to international indices. ETFs are passive investment instruments based on indices and invest in securities in the same proportion as underlying index. Examples of global mutual funds ETFs are DSP BlackRock US Flexible Equity Fund, Franklin Asian Equity Fund, ICICI Prudential US Blue Chip Equity, JP Morgan Europe Dynamic Equity, among others. International real estate investment is a popular investment option among Indians which offer diversification with global edge, inflation hedging, generating cash flow in foreign currency for multiple purposes, applying for permanent residency in that country. Under the LRS, there is a restriction on remittance for an individual. However, other family members can be included to raise the limit. Bank loans from India and abroad can also be availed. Indirect investment through REITs is also a viable alternative. Thank you.